Hey everyone, I hope all of you are having a great weekend. Let's start with the weekly recap of global markets and some of the important stocks. I'll start with SPX. We'll go to weekly chart. Let's delete the older drawings from here. Okay, so as you can see, at least for past 6 weeks, when market started correcting in mid of Feb, and these are the levels at which currently market is trying to regain or trying to come over and getting a solid resistance, right? So if you can see this level of around 5600, 5650, these are the levels at which SPX is not getting over and is trying to regain those levels. Interestingly, what I see here is, and you guys will appreciate, if you see in 2024 around July, I think this was a period when market corrected almost 10%. Let's take a quick look at that. So if we draw this, so this was around 10% of correction happened in 2024, and you can see here these were the levels at which it got a strong resistance, corrected until I think 5100 levels here, and only then market started moving up, and again at this level market got a huge resistance, so it's almost forming a double top here actually during August of 24, and corrected, and then around 5300 was the level after which market started moving up. 5400, sorry. So 5400 was that level. So 5400 seems to be a psychological level also here. It's acting like a very strong psychological level from past. So this for sure 5650 is a very strong resistance at which at least for past 3 weeks market has been hovering around. So before that, as you can see, when there was this free fall, I think this was the last week of Feb and first week of March, market actually got support at this level, and after that for past 3 weeks this is where the market has been struggling. So any dip further below from this point will probably market will try to test this 5400 level, which was a historical test here as well as during this bull run here. So you can see 5400 appears to be a strong support if market starts retracing from this point. One thing I can note here is, although last week I think the main fall came in the last 1 day or 2 day of SPX, so I think Friday market fell around 2% if I'm not wrong. But overall weekly candle, if you see, the volume of the sell for last week is low. So market is telling us that even though there was a sell off, the number of sellers or the rate of sell is decreasing. It will be important to see what happens next week in terms of overall selling pressure. If in the weekly candle the market closes lower than this, and if the volumes are shrinking, it will be a clear indication that sellers are disappearing or sellers are reducing or declining slowly and buyers are getting in, but still not yet confirmed. Still pretty strong volume, above average volume candle in terms of selling, but it is declining. The overall selling volume, as you can clearly see here, is declining. See here, so this is absolutely declining, and price is going down, volume going down. So VPA is in confirmation, but still these levels remains to be breached. So 5650, 56 around this level, 5675, 60 around this level, this is a very important level. SPX has to come over this level, regain, reclaim this, and then only it can start moving upward from here. Until that happens, we will not take any bullish trade on SPX. Let's see the daily chart on SPX. So yeah, as I have been saying on daily, it's completely 200 DMA is like a very strong resistance. The moment market breaches, I mean any market or any stock, you will see, when you are doing technical analysis, you will see anytime it breaches. Let me actually delete all the old drawings, it will be helpful. So this red line is the 200 DMA. So let's draw a trend line there. So you can see here, right? So this is 200 DMA. So market breached 200 DMA, and since then it's like clinging towards 200 DMA. Every time it tries to like touch 200 DMA, close above, and then fails. I think in last weekly, when I was doing this weekly video, I remember I said that any time a breach or a breakout happens, at least 90-95% of the time that breakout will fail. So we saw that on Monday market moved up, right? It breached 200 DMA, right? Before that Friday, so last to last Friday, the market was below 200, but we had a green candle, so we were expecting that Monday market might open in green because of this green candle. It did open in green. It breached 200 level, 200 DMA, so there was a breakout of 200. It tried to stay above 200, but as all of the breakouts will fail, so these are the levels at which most of the stop losses will be. So market will go test that and then come down. So it has again done the same thing, right? You can see here there was a breakout, and then the breakout is failed, right? It came sharply below 200 EMA. So basically all the stop losses here are getting triggered, and then market is again in a bear run. Friday, of course, market opened below 200 DMA and remained much below 200 DMA. So even on daily, the 200 DMA seems to be very strong resistance for the market to go up. Any bullish movement from here has to stay above 200 and test it. So when I say that, what I mean is, if market has to continue going up or any positive direction, it has to breach the 200 DMA, test it once, and then go back up. So something of this sort market has to make. It should come back to 200, it should keep above 200 and then move beyond that level. So unless that happens, we will not take any bullish trade on SPX. Rather, on the opposite side, the moment market touches 5700 zone, this zone of 200, as you can see the 200 DMA, right? The moment market touches this zone, you can actually go on a short position. So 5700 calls can be short. If you want, you can buy 5700 put. Of course, do your own analysis and take care of your risk and position size, but those are the levels which I am looking forward to. So I have a 5700 short trade open. So I'm shorting 5700 and I'm buying 5600. So I'm doing vertical calls. The moment market touches, I'm doing a vertical call of 5700. So these are very important levels for SPX to watch for. Now if it continues going down, then of course you can see 5500 level becomes a very important support. Not only during this fall 5500 was a support, you can see the 5500 has also been historically, it has been a crucial point here. So 1 2 3 4, you can see like multiple times 5500 being a very strong support. So I'll be watching for those kind of strong, those kind of support levels for SPX for now. And no, I'm not taking any bull or positive position on SPX until it breaches 5700 and stays above that. Hey everyone. Okay, so that is for SPX. Let's take a look at overall market volatility. Oh, we can actually move to a different view. Yeah, perfect. So this has volatility and SPX. Okay, awesome. This is good. So the chart above is basically the candlestick chart of volatility, and the below is SPX, the simple line chart of SPX. So let's take a quick view at this. So these were the levels. I think I shared some analysis or deep dive into volatility. So 29.7 or around 30 was the volatility when when the overall market volatility started to go down. But let's take a look what happened here. So around Feb, when the market started to react to those tariffs, so volatility started increasing, kept on going from the levels of 14. So the volatility was already very low. So market was expecting some kind of correction. Tariff or whatever news, etc., it gave market a chance to react to it, and the volatility started to go up. At the same time, you can see market reacted and the SPX kept on falling down. So once the volatility was at the level of 30, which is actually one of the highest volatility level historically, market started to retrace from that level. So you can see around that level, when the volatility was around 30, the volatility got a resistance and started coming down. So this is where the volatility started to retrace and markets started going up. So, but the interesting thing which to note here is the volatility increase was combined with a steep market fall, you can see. So I think this is 2 or 2.5 weeks of trading. The volatility increased from around 14 level to 30, so almost doubled, and SPX saw a steep correction of more than 10%. On the contrary, when the volatility started decreasing, so from 30 level, it has almost dipped down to 17. So not 50%, but very close to like more than 40%. SPX didn't retrace back that much. So SPX didn't increase by 10%. So you can see SPX almost corrected. If we take this as a pivot level, so SPX almost corrected from 10% to zero, or below zero actually. So it was more than 10% of correction. But when the volatility shrank, or volatility decreased, SPX didn't retrace as such. So the rise in SPX, whatever was happening for past few days in last week, and I think couple of days a week before, SPX couldn't get that kind of momentum. So what did it tell? So one thing is for sure, the buying which came towards the end of this volatility period, the buying which came didn't come with a lot of conviction. There was some buying, of course, but it didn't come with a lot of conviction to regain the market strength. So market is still not sure, it's still very unsure about getting into the next bull run. So it's still not sure to start making higher highs. And that is why you can see the market is reacting to a little bit of dip in volatility. Now, from this level, now you can see that the volatility has started increasing once again, right? And accordingly, market has reacted and market is taking a dip. So if we have to simply react on this information of volatility, from this level, if we purely do a technical analysis of volatility, I can clearly see that the last Friday candle of volatility has actually breached the shortest term moving average. So this blue line is basically the shortest term moving average. So it breached the short term moving average, which means The volatility is bullish, which means volatility might or will find a support from this zone and might increase even further, which means it will take SPX to further down. And we saw in the SPX analysis, the 5400 level is the first level where it will get tested. So I am expecting, if the volatility keeps on increasing, this is the first level when SPX has to come and test back, and then only market will react in terms of any positive movement. If the volatility increases in next couple of days and SPX come to this level of 5400 and breaches that, I'm expecting the volatility to keep moving upwards, break this level of 5500, touch 5400 levels, and then only I see volatility going down and SPX moving on the opposite side of volatility, which makes sense for SPX to start moving up from that point. So this is how I'm looking at volatility overall. Let's take a quick look on the weekly basis also. Sorry, delete this. Let me put this level of 30 here. So that's the 30 level. So you can see there was sharp decline of volatility. The moment it touched the level of 30, there was a sharp decline. There was a decline, and then it kept on declining, and this was a small move or up move of SPX, which we saw. Not a great it didn't reach, of course, the levels of what it was earlier, but yeah, there was a small, like probably few days of bull run. But the last week, the volatility has again increased. Let's see how much it increased to. So it was almost a 30% of increase of volatility, which has caused almost 4 to 5% of dip. I think let's take a quick look. What is the percentage dip of SPX for the past week? So from this level to here, so almost 4% of dip in SPX with almost 30% dip in 30% increase in volatility. So market is reacting very sharply on at these levels of volatility. So it has to spend time. If the volatility decreases again, it needs to spend time at this level, consolidate at this. So you can see here, all these while when the market was making new higher highs, the volatility was not like dipping sharply either down or up. The volatility is always moving small candles and consolidating. This is what gives market a momentum, market bullish momentum. It creates a base, and it based on this, the market moves up. So I'm not seeing that here. Rather, it's a very sharp V kind of shape. The volatility is making a V shape on the chart here. You can see on daily it's more clear. It's a completely V shaped pattern here, and that will keep on increasing. That will keep on selling pressure on SPX. So this is how I'm reading volatility for now. Let's take a look at the Mag 7 and some of the momentum stocks for this week. Yeah. So start with Apple here. Yeah, I think we discussed this last week. Still quite weak, absolutely below 200 DMA. So yeah, I'll not take any long positions on Apple for now. It has to retest these levels, go up and close above 200 DMA on daily at least for any bullish movement from here. On weekly, let's take a look at it. So this is how it's been trying to position. You can see it's almost moving this sort of range. So yeah, clearly making lower lows. So I wouldn't even consider on weekly also. It's quite weak. uh, it has to retest this level, and interestingly, as you can see, this level, this trend line almost coincides with the short-term moving average. So on weekly chart, when we are saying, so the short term almost becomes 100-day moving average. So that's a pretty solid, I would say, zone. If we draw this here, it also coincides with its historical resistance levels. So I think it should at least try to test this and then go down. So I wouldn't make any long position until it moves above the levels of 230 plus. Then only it will have a clear bullish indicator, bullish indication. Before that, I will not take any long trade on Apple. Microsoft, of course, same thing here weekly, as you can see. Oh, so interestingly, last week when we were doing this analysis, uh, last week exactly close at those levels, so 378. So that seems to be a pretty stable support. If Microsoft reaches this point, I think the next support only is around 300 level, if I'm not wrong. So this is what is Microsoft next. So 350. So it'll be interesting to watch for Microsoft tomorrow, if is able to keep itself above this line, above 378. So that seems to be a last support before it crosses and goes to this long-term support. I think this was 2020, after pandemic, which is 350. If it is able to keep above this, then I'll still be not bullish. If it tries to consolidate at these levels and keep hovering around 400, creates some base, if there's some consolidation happening around this level, I'll be a little bit more, I would say, positive in terms of Microsoft trying to make a base to move up. But before that, I will not be. On daily chart, let's see, SFT. Yeah, so much below. So interesting here, so below 200 moving average, and all the moving averages, long term, mid term, and short term, they are sequentially stacked in opposite directions. So as you can see, 200 DMA is at the top, 50 DMA is at in the middle, and the shortest moving average 20-day DMA is towards the end. So very nicely poised for a bear run from here. So I don't know if you guys want to do short Microsoft from here, but it's poised. I mean, it looks like a nice bullish trend actually starting from this level here. So yeah, 378 remains to be watched very closely on Microsoft. If you have a position on Microsoft, if it breaches 378, I would consider doing some risk management at those levels. Nvidia, of course, it fell sharply last week. Almost was a constant fall on Nvidia. It's like hovering around 100, 109. So I think we have already talked about Nvidia, and completely, as you can see, it's trading between these channels. So I'll not go into more deep, but this is exactly how Nvidia is traveling. We have already seen this. So it will, again, it may try to touch this level, meaning it will go at the level of 100 if it goes beyond that. So 104 becomes its first sort of a support zone, and then if it has to travel in this range, it might resist or break and then come to around the range of 100 or slightly below 100 also. So those will be interesting to watch for Nvidia. Weekly Nvidia is trying to, let's delete this here, trying to resist around the midterm average, but doesn't seem to be a very solid support on the weekly at those levels. So like 101, 102 is that a range which looks like a better range for Nvidia to find a solid support. Very low volumes again. Most volumes are sucked out here. Even on like daily, there's not big volume. So all this green candle didn't have any volume, as you can see here towards the on the volume candle here. So almost like negligible volume. So No volume, so I will not be interested in Nvidia for any bull run for now. Amazon has sharply came down below 200 now, so I'm no longer buying, or rather I'm no longer taking any new long position. I'm not exiting my any long position, but I will not be taking any new long position until unless it reclaims the 200 level. And you can see 200 level also actually is sorry, the 200 DMA 200 levels is also coincides with the 200 DMA, so that's an interesting proposition with Amazon. So anything below 200 I will not go into a big long position. If you have a position, you might consider doing some averaging out, but no big chunk buying on Amazon for now. Google, what can I say? Google, I was trading Google around 165.70, and Google seems to be making a new lower low here. So a new bear trend has actually triggered in Google. So I am watching it very tightly. So you can see this. These were the levels which we I think talked about in our last discussion, and it has sort of, yeah, you can see here, try to breach, came back sharply. Let's see on weekly. Still weekly also it breached the meta moving average. So yeah, clearly very harsh selling pressure on Google. On weekly chart you can see a very good volumes, or above average volumes on all the selling days. So yep, no long position as of now until it closes above. On weekly it has to at least retest 160 plus to reclaim that level to get into any kind of buying. So 165, 175, those are the range where I'll start getting new long positions on Google. Meta, I think we discussed this last week also. It's consolidating at the same level, so nothing new happening on Meta. It tested this level, breached for a very brief period of time, the midterm 50-day, and then is again testing the same. So nothing new in Meta. Still hovering around its 200 DMA. Tesla saw a good upside move. Let's take a closer look at Tesla here. So after correcting, I think almost 40%, right? Let's check. Yeah, no, 55%, sorry. So almost correcting 55%. Tesla saw some sort of relief around this level here, which so around 200 zone. I think that was a point where a lot of institution and a lot of fund managers, people in suit and tie, they were saying Tesla should go below 200. So those were the levels at which people were predicting 200, and then Tesla reacted sharply to it, and even moved very close to 300. So retraced quite nicely with strong green candles on both volume and price. You can see here price going up, volumes also going up on Tesla. So that was a good sign. It has corrected. There is some correction on Tesla, but I am not worried because you can see here the correction came last week with not sharp volume here. So Tesla may consolidate at these levels. It may start consolidating before making any big move from here. So I'll be watching at 270 to 280 is a zone which I'm expecting Tesla to consolidate. RSI is hovering around 50, so that's a good sign. It's not breaching 50 for now. Let's look at weekly. Weekly looks okay around above, of course, around 50 DMA. It was around 50 DMA, above 200 DMA, so it looks okay, but it's not giving a clear indication of a positive or a bull run from here. Rather, it looks more of a consolidation range for me. So I'm expecting Tesla to somewhere, it should consolidate somewhere around these levels, like from 260 to 80. sort of level should keep on consolidating for some time before making any big move. So that's your Mag 7. Let's take a look at some of the momentum stocks which I am tracking. App is going under some sort of legal issues, so let's skip that. Chevron. So Chevron has a good movement. Chevron has been rising sharply. So you can see here very good movement from 150 to almost 170. Very nice movement supported by good volumes here. And the decline, which there's a small correction which has started. I think last week, the last 2-3 days, it started to correct here. You can see some correction happening for 3 days last week, and the entire correction is almost no volume, so volumes getting sucked out. So VPA is not confirming prices going down, volumes going down, so it is not a selling pressure on Chevron. It is just a minor correction, which means if it consolidate at these levels, we can expect this to keep moving up further. So we can think of taking a trade around these levels of 165 zone. If it traces 165 and bounces back, that will be my first entry long. And the moment it reaches this 168 170 level, that becomes my second entry long for Chevron. These are the levels I'm watching Chevron for. So if it goes this will comes, and then so these are my levels here which I'm looking at Chevron. ATT is doing fantastic. A very nice movement supported by good volumes. RSI is supporting. Everything looks very good for ATT. I think still there is some ride left here. There was some consolidation of I think December till early Feb it was consolidating. So nice, I think 1-2 months of consolidation which has given to this good base and has started moving up. So I'm a little bullish on ATT. We might see some correction here. It's not a double top happening, but there's some correction might happen here. If it retraces at these levels, I would start I would probably do some buying here at these levels on ATT. So 27, around 27 or 2750 to 28, these are the levels which I'll be watching at. If it retraces those levels and test, I will plan some entry on ATT. So these are the levels. CB is a new entry into my watch list. I have started watching this a little closely now. It's forming a very nice pattern. You can see a nice cup and handle pattern happening here. So it breached the brim, and since then it has not stopped. So this is, you can see, a cup and handle. You'll have to practice this at least 100-200 charts, otherwise you'll not be able to see these patterns quickly with naked eye. So there's a nice cup and handle saucer pattern here, you can see, and then post that brim it has never retraced to that brim. So very solid support. You can see very nice circular base happening here. Good correction, very healthy correction with very low volumes, getting support on the lowest moving average, and then getting making new highs from it. So very nice and healthy movement on CB. So I'm looking longer on this. AWK is another new entry into my watch list. So you can see a very decent movement of almost, like, I think 20%, yeah, 24% move here for AWK, and a small correction, I think corrected here 13 points, but the correction was on lower volume, and then since then it has started moving and retracing back up. So I'm looking for the first target around 150 plus, and that's something which I'm like eyeing on this. SPNT, very solid movement for past 2 weeks. I don't think there's a opportunity is lost to make entry, but I wouldn't enter now. It might go into some correction, because you can see there's a sharp move. So almost I think March starting it has gone 20 around 20% up. So I'll wait for slight correction here. If it comes around 16.5 level and then it retests these levels, I will consider going long. But yeah, very strong bullish movement, and it may give some decent return in the next couple of weeks or a few months. Cool guys, I think I'll take a pause here. So this is our weekly for this week. Let's see how the market behaves opening tomorrow and rest of the week tomorrow, next week. Let me know if you guys need any other stock to be watched or analyzed. Feel free to drop those scripts on Discord, and we can do some deep dive into those as well. Cool. Thanks everyone. Take care. Bye.